What if I told you that the world's best investors, Warren Buffett, Ray Dalio, the biggest pension funds on the planet, all agree on one thing? The smartest investment for most people is not picking stocks, not buying crypto, not timing the market. It's a simple portfolio: 60% ETFs, 40% bonds. Let me explain exactly why. First, what is an ETF? ETF stands for Exchange Traded Fund. Think of it as a basket. Instead of buying one single stock, say Apple or Tesla, you buy a basket that contains hundreds or even thousands of companies at once. When you buy an ETF that tracks the S&P 500, you own a tiny piece of the 500 biggest companies in the United States: Amazon, Microsoft, Google, Apple, all of them, in one single investment. And the fees? Almost zero. We're talking 0.03 to 0.2% per year. Compare that to a traditional fund manager who charges 1 to 2% and still loses to the market most of the time. That's the power of ETFs. Now, why 60% ETFs? Because over the long term, the stock market always goes up. Always. The S&P 500 has returned an average of 10% per year over the last 100 years, through wars, through crashes, through pandemics. 60% in ETFs gives you growth. It builds your wealth over time, but the market can drop. 2008, the S&P lost 50%. 2020, it dropped 30% in 3 weeks. That's where the 40% bonds come in. Bonds are loans you give to governments or companies. They pay you a fixed interest rate. They don't grow as fast as stocks, but they don't crash like stocks either. When the market panics and stocks fall, bonds usually hold their value or even go up. Your 40% bonds act as a shock absorber. 60% growth, 40% protection. This is called the 60-40 portfolio. It has been the foundation of smart investing for decades. Here's what this looks like in real life. You invest €1,000 per month. 60%, 600 euros, goes into a global ETF. 40%, 400 euros, goes into government bonds. After 10 years at historical average returns, your 1,000 euros per month becomes approximately 200,000 euros. After 20 years, over 600,000 euros. You didn't pick stocks. You didn't watch charts all day. You just stayed consistent. That is the most powerful investment strategy for 90% of people. Start simple. Stay consistent. Let time do the work. If this video helped you, smash that like button, subscribe, and share it with someone who needs to hear this. I'm Kurt, and this is Investopia. I'll see you in the next one. This video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions.